Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Very good morning, and welcome to a brand new month as well as a brand new quarter. We are today the first trading day of Q3 2025. Very good morning. Today will be Tuesday, the 1st of July 2025. So as usual, before we jump straight into the gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the gist of the daily dose, which is the intraday technical outlook on those broad-based cross-asset classes that we cover on a daily basis, i.e. the major US dollar pair, a total of 4 of them, the major stock indices, and as well as the two key commodities markets, gold XAU/USD and West Texas crude oil. Let's have a recap what has taken shape yesterday in terms of the news flow, economic data release, if any, and as well as in today's early Asia session before the start of today's daily dose at 11 a.m. Singapore time, their impact on the various broad-based cross-asset classes intraday movement. All right, so let's start with the major US stock indices. So the major US stock indices continues to rally within our expectation, and the S&P 500 and the Nasdaq 100 continue to scale fresh all-time high yesterday, with the SPX 500 breaking above the key psychological level of 6,200. Yesterday it closed at 6,204, advanced by 0.5%. So what I could see is initially it was trading in a very tight sideways range since the start of yesterday US session, which is at 9:30 p.m. Singapore time, and the rally actually came in on the last 2 hours of the US session yesterday. That means i.e. at around 2:30 a.m. Singapore time, or say that the last 1.5 hours, all right, and it closed near the session high. All right, so this is a very strong mini bullish reversal that's being seen on the US stock market yesterday. So very similar movement on the Nasdaq 100 as well. So the Nasdaq 100 added 0.64%, and it traded sideways until we see the bullish momentum came back into the picture at 2:30 a.m. Singapore time yesterday, which is in the second half of the yesterday US session. So those who followed my daily dose of market insights since 2 weeks ago, we flipped to a bullish bias on the major US stock indices, respecting the bullish momentum after it come break below its respective range support on the onset of the Israel-Iran conflict, okay, that lasted for 12 days. All right, so with that, yes, we know that it's climbing up a wall of worry. What I mean by wall of worry? Wall of worry meaning that we still have a negative, we call it, impact on the US economy, especially as we head into the deadline of US President Trump 90-day pause on the higher reciprocal global tariff rates, that's excluding China, that's going to be due on 9th of July. And right now there is some hiccups on some negotiation process with some trading partners, so that I'll share with you guys. But the key story over here is that on a technical analysis perspective, the bullish trend still remains intact on the major US stock indices, despite that we are now still climbing up on the wall of worry. So I'll be tackling things one step at a time by sharing with you guys what are the key levels to watch on the intraday basis. Then we have the Dow Jones Industrial Average also added a gain of 0.6%. And the other underperformer yesterday was the Russell 2000, which is up by 0.12%. All right, so the FX market continues to break new lows. I would say that fresh multi-year low. That means we're talking about the dollar. The dollar continue to break multi-year low. So this is the 5-day rolling performance of the US dollar as we are speaking right now. So all of them, all the major dollar pair continues to weaken. The weakest was being the Swiss franc, where the dollar Swiss is down by negative. The weakest was the dollar against the Swiss franc. Pardon me. So that means the strongest is the Swiss franc against the dollar. That's the mirror image. So why I did that, this particular chart is using the dollar as a base currency. So with that, the dollar is the weakest against the Swiss franc, down by negative 1.6%, and the second weakest against the euro dollar, where the dollar euro rate is down by negative 1.5%. So if you look at on a 1-day rolling performance basis, the weakest was the dollar yen right now as we are speaking, breaking down since 10 a.m. Singapore time. That means 1 hour ago, it actually did that bearish push down. So later I'll share with you those who followed my daily dose on a very regular basis. I did mention that one of the pair to look out for is the dollar yen, because is consolidating within a bearish range configuration. And yesterday, and in fact this morning, it broke down below this bearish range configuration as anticipated. So later I'll share with you what are the key levels to watch out for in our dollar yen short-term intraday technical outlook. And so there's this reason why the dollar yen is actually so weak in today's Asia session. That means the yen is strengthening is due to a also reinforced by a particular release of a key economic data that is supporting yen strength coming back into the picture. That means, what do I mean by that? So if the economic data is this, where is it? Yes, this Tankan Large Manufacturing Index. Take the view that this is business sentiment outlook on Japanese large manufacturers, which is very tier one, because that's a tier one economic data. So Tankan Large Manufacturing Index, that means we talk about the business sentiment pertaining to large manufacturers. For large manufacturing firms in Japan rose more than expected, so it hit 13. From 12 that was printed in Q1 previously. So this is released by the quarter basis. So market is expecting a level of 10 instead. So then we also have the Tankan large non-manufacturing index over here. So this large non-manufacturing index for Q2 slipped slightly below below the previous print of 35, but within market expectation of 34. So we're talking about net overall, the business outlook in the manufacturing sector and the non-manufacturing sector. We talk based on the non-manufacturing index, it has a positive impact on the Japanese economy, despite that ongoing trade tariffs negotiation between Japanese officials and US officials that are still in the limbo. But market choose to ignore that and push up the FX yen, the dollar, the push up the yen strength in the FX market, because that actually boils down to a so-called continuation of this slow pace of normalization policy advocated by Bank of Japan, right? So that is supportive of the yen strength, right, based on this news flow over here. And because of the yen strengthening itself over here, we see a bit of pullback on the Nikkei 225. All right, so the Nikkei 225 is actually down by negative 1% today, and also particularly due to a rather specific segment of news flow regarding about that limbo that is ongoing between US officials and Japanese officials to negotiate this trade deal. And with that 90-day expiration of the higher reciprocal tariffs is pretty due soon on 9th of July. And Japan has a higher reciprocal rate, about 20+% on top of the base rate of 10%. And Trump, as usual, yesterday, he actually threatened Japan, saying that Trump floats a Japan tariff. So he threatened to impose a fresh tariff level on Japan, citing that the country unwillingness to accept US rice exports despite Japan's massive rice shortage. So there seems to be some kind of a hit block between this ongoing negotiation between US officials and Japanese officials. So Trump, as usual, once there's a kind of a hit block, he will actually threaten the opposite negotiation party, which is Japan right now, to threaten it with a higher trade tariffs. So will it break through? Will Trump really actually impose these higher trade tariffs on Japan? We shall see. Or will he just back down and give it a longer time of extend the deadline beyond 9th of July for Japan, in order for the two counterparts to actually negotiate a trade deal? So, but nevertheless, it tends to actually create a negative feedback loop in the markets. And one thing tends to be a bit of consolidation is that the White House National Economic Council Director Kelvin Hazard said that the administration aims to finalize deals with partners after 4th of July. All right, so that means there's still a chance that Japan may actually go through with this negotiation trade deal, this negotiation process, and eventually get a trade deal with US after 4th of July, given by this remark made by the National Economic Council Director, Kelvin Hazard. All right, over here. So, and he said that the talks between US and Japan are expected to continue despite Trump's trade over here. But nevertheless, it created a bit of negative feedback loop in the Nikkei 225. So later I'll touch on the intraday technical outlook, the updated one on the Japan 225, which is representing the Nikkei 225. All right, over here. So with the dollar weakening, all right, over here, what we could see is that gold price continues to rally and cleared above the 3,300 level as we are speaking right now, and added on to additional gains of positive 0.41%. And if we were to look at the daily chart of gold over here, it's considered as a positive price action development. Why do I say that? Because on gold, we know that in the last month or so, since 16th of July, there's a 6% decline over here, and this 6% decline managed to find support right exactly at a medium-term ascending channel that is in place since 31st of December 2024 low. And how it bounces over here, it formed a bullish piercing candlestick at the end of yesterday's US session. And after that, we do have a intraday positive follow through as we are speaking right now, as gold continues to trade higher in today's Asia session at 0.4%. So later I'll share with you what are the key levels to look out for in today's intraday technical outlook for gold. Right over here, and oil prices continues to actually plummet lower. So what we could see is that the West Texas crude oil, let me have a quick look here. Yeah, the West Texas crude oil continues to inch lower, negative 0.36%, after failure to break above 67.67 US dollar per barrel. And market is now anticipating that this weekend there will be a OPEC Plus meeting, and OPEC Plus will continues to increase its production for the month of August. Right, so that actually potentially could increase supply out from the Middle East, which is depressing the intraday movement of West Texas oil. All right, and one more economic data I want to share with you guys is more pertaining to the health of the Chinese economy. So today we have the release of the privately compiled Caixin Manufacturing PMI. So this Caixin Manufacturing PMI is slightly different from yesterday MPS PMI, because Caixin Manufacturing PMI consists of SME company as well as those state-owned enterprise, which tends to be much larger. So the Caixin Manufacturing PMI in fact give us a better comprehensive outlook on the manufacturing, the health of the manufacturing sector in China. So it actually roar back to life and be in a expansionary mode again after dipping to a contractionary level at 48.3. So it recovered to 50.4, and also managed to actually inch up above expectation of 49. So given that the health of the manufacturing PMI in China as compiled by the private sector, a private company Caixin, indicate that manufacturing activities is not deteriorating, and that created a feedback loop back into the China proxy stock market, which is the Hang Seng indices. Initially it was actually up by a fair bit, then now it actually declined again by down oh sorry, it's actually a holiday today, pardon me. So there's actually a holiday in the Hang Seng index over here, but the China stock market managed to inch out a slight gain of 0.10%. All right, 0.10%. So later I'll touch on the Hang Seng index, what are the key levels to watch. But initially, during yesterday US session, it managed to bounce off from a intermediate support level. All right. So now, with then one more particular news flow is more pertaining to a trade flow as well from Eurozone. So over at Eurozone, there seems to be some breakthrough between Eurozone trade officials and US trade officials, stating that Euro side of the camp is willing to accept Trump universal tariff. Let me still recall that for Trump, he has two kind of tariffs. One is the base tariff, which is 10% for all countries, and a higher reciprocal tariff. All right. So some countries right now wants to reduce the reciprocal tariff as well as totally remove the universal tariff. But for EU over here is that they are willing to actually to accept the base tariff of 10%. But however, they will actually wants to push for US to effectively lower down all those other sectorial tariffs more pertaining to products wise, because Washington has a 25% tariff on automobiles, and we know that automobiles is a key export from Eurozone, so they want it to actually be reduced, and as well as 50% tariff on steel and aluminum. All right. So there could be some kind of potential breakthrough between the European trade negotiation with US, because the EU is now willing to accept the universal 10% tariff, but on top of that, they want US side to actually reduce significantly on that sectorial tariffs, 25% on automobiles and 50% on steel and aluminum. So that also kind of see the euro dollar strengthening at the start of today's Asia session. So doing this is the one-day rolling performance. The dollar is weakening against the euro by negative 0.07%. All right, so later I'll touch on the intraday technical outlook. All right, so that sum up the first segment of today's daily dose. So let us now move on to the second segment, which is the intraday technical outlook on the various cross asset classes. So with that, let me expand my screen first. All right, over here. Great. So let us start with the FX market. Right, so start with the euro dollar. Right, so as you could see, the euro dollar continues to burst up, almost hit our resistance level at 118.10, 118.25 before trading downwards in today's Asia session. And right now we managed to see a little curvature upwards after the earlier mini push down that is being seen at the 9 a.m. hour mark. So far, the hourly RSI managed to break out above a parallel descending trend line. There is no bearish divergence that is being seen at the overbought level, so indicating that the ongoing bullish momentum still remains intact. So right now, with the first support level, okay, so the first support level will be today's Asia session low, will be at the moment will be at 117.80. So this is my first support level to watch, but I do not want to tighten my first support, tighten it to be my pivotal support at 117.80 in case of any whipsaw, as it hasn't surpassed above the resistance level of 118.10, 118.25. So I'll be adjusting the pivotal support level to 117.45 instead, which is very clearly the mini ascending triangle range configuration that has a bullish breakout in yesterday US session, now turned into a key near-term pullback support level after being tested it for 3 times since last Thursday. So 117.45 will be my adjusted tighten short-term pivotal support on the euro dollar for today. Maintain our trend bullish bias on the euro dollar above 118.10. 118.25 sees the next intermediate resistance coming in at 118.70, which confluence with a Fibo extension cluster levels. Only an hourly close below 117.45 will negate this bullish tone to see a minor corrective decline to revisit the minor range support level of that so-called previously minor ascending triangle at 116.95. Only a breakdown below 116.95 open up scope for a deeper minor corrective pullback to expose the next resistance level at next support level, pardon me, at 116.30. which is the former minor swing high area of 12th of June and 24th of June, now turns into a pullback support. So i.e. still maintaining our intraday trend bullish bias on the euro dollar using a adjusted upward pivotal support level at 117.45 for today. Next up will be the sterling dollar. So sterling dollar in today's Asia session managed to stage a bullish breakout from this bullish flag formation as we are speaking right now, and it's now retesting that minor flag formation range resistance at 137.50. So no change still, because it's haven't cleared above 137.50. I do not want to tighten my pivotal support level to be so tight. So first support level to watch out for will be the breakout point of that minor bullish flag resistance now turns into a pullback support at 137.20, unless it managed to have a hourly close at the start of the European session. Thereafter at 137.50, then I could tighten my pivotal support level to 137.20. So for now, still using the same pivotal support level yesterday at 136.70, which indeed managed to did a bullish U-turn at the start of the US session. So at the start of the US session, there was a minor sell-off, but this sell-off held right exactly at the 136.70 pivotal support which I have highlighted yesterday for the sterling dollar. So this is indeed a key inflection level for the bulls to survive. All right, so 136.70 short-term pivotal support remains on the sterling dollar. Maintain our trend bullish bias on the sterling dollar above 37.50, exposes the next intermediate resistance zone at 138 figure, 138.10, followed by 138.70 next, which is a one-time Fibo extension taken from the low of 23rd of June. However, if price action starts to do a bearish breakdown and the hourly close below 136.70, today's intraday trend bullish bias will be invalidated to see the start of another minor corrective decline sequence, re-exposing 136.30/135.70 on the sterling dollar, which confluence with the rising 20-day moving average as well. Okay, so that's for the sterling dollar. Next up will be the Aussie dollar over here. So the Aussie dollar, where is it? Yeah, here. Good. The Aussie dollar managed to stage that bullish breakout above that. Okay, let me go to the daily chart. You'll be much more clear. So the Aussie dollar continues to inch higher after that bullish breakout on last Thursday, 26th of June, from this rather complex sideways range configuration that is in place since 24th of April. So that's close to about 7.5 weeks of range configuration. It managed to stage a bullish breakout, and yesterday it continues with a positive follow through by inching up higher to at 0.77%, and today's we do a bit of minor consolidation. Okay, but what we could see over here is I will actually now tighten my short-term pivotal support level from 65.10 to 65.30, which is also the lower limit of this ongoing minor ascending channel that is forming from the minor swing low of 25th of June. So still maintaining our intraday trend bullish bias on the Aussie dollar in any dips, using 65.30 as my short-term pivotal support level. Two resistance level to watch out for today. Number one will be the psychological level and the 11th of November 2024 swing high, which is the 66 figure level, and the 0.764 Fibo extension taken from the low of 23rd of June above 66 figure level may expose the next intermediate resistance at 66.30, which is the one-time Fibo extension level. However, if price action starts to do a bearish breakdown and the hourly close above 65.30, so that would negate the bullish tone on the Aussie dollar to see it slipping downwards to retest the 20-day moving average at 65.10. So I'll be watching closely at the price action of the 65.10 for any signs of bullish reversal by the hourly bullish. Is there any formation of the hourly bullish candlestick, given the fact that right now we are in the midst of a short to medium term uptrend phase on the Aussie dollar, given the fact that it has started to trade above the 20 and the 50-day moving average. Below 65.10, potentially see a messy, choppy, corrective decline sequence back into play for the Aussie dollar. So that will be potential see a failure bullish breakout on last Thursday and see it dipping down to retest the minor swing low of 25th of June at 64.80 level. Okay, so that's for the Aussie dollar, still maintaining a intraday trend bullish bias using a slightly upward adjusted pivotal support level for today at 65.30. Next up will be the dollar yen. All right, so the dollar yen yesterday, we anticipate the bearish breakdown from this ascending range support that is in place since 23rd or 22nd of April 2024 low. So this is a minor ascending range support. So very clearly there's a bearish breakdown in today's Asia session at the start of the Asia session, which is partly driven by the positive outlook from the Tankan large manufacturing outlook survey report. So the hourly RSI continues to print lower high. We could see over here there is no clear signs of a bullish divergence at the oversold level, so indicating that the bearish momentum, at least in the short term, remains intact. So we will be looking at the first support level. A first resistance level will be at 143.90, which is the bearish breakdown trigger level. Now turns into a pullback support. We don't want to put it so tight over here just in case of net whipsaw, using yesterday's bearish rejection level during the start of the US session at 144.45. We saw confluence with the 50-day moving average. So this will be my adjusted downward pivotal resistance for today, 144.45. Maintain our bearish trend bias in any bounces on the dollar yen below 144.45. Next support level to watch will be 143 figure level, followed by the minor swing low of 3rd of June at 142.40 in the first step. Only a bullish breakout and an hourly close above 144.45, so that would invalidate the bearish breakdown scenario. That means there is a failure bearish breakdown below the ascending range support from 22nd of April 2025 low, and reintegrate back into the complex range configuration again for the next intermediate resistance zone to come in at 145 figure level, 145.20. A breakout above 145.20 sees 146.25 next. So that's for the dollar yen, maintaining our intraday trend bearish bias given that the price action has broken down below the ascending range configuration support level, now using a slightly tightened short-term pivotal resistance at 144.45. All right, so that sum up the intraday technical outlook on this four major US dollar pair. So now let us now take a look at the major stock indices, starting with the Hong Kong 33. All right, so the Hong Kong 33 during yesterday US session, it managed to actually bounce off the pivotal support level at 23.88 that we highlighted earlier. The hourly RSI also continues to remain in a rather bullish momentum condition. As you see, the price action now managed to break above the 50 level yesterday and also break out above the parallel descending trend line. So given the fact that today will be the closure of the Hong Kong stock market due to a public holiday, so if tomorrow once the Hong Kong market reopens, the level still remains the same. So 23,880 will still be the short-term pivotal support level to watch, very important level. In order for the bulls to gain a much more, we call it higher probability of a push-up, it got to clear above this intermediate resistance at 24,270 before retesting 24,490 next. All right, only a bearish breakdown below 23,880, so that would invalidate the bearish bias on the Hong Kong 33 to see it slipping downwards to expose the next near-term support level at 23,690, 23,560. So these are the key levels to watch once the Hong Kong stock market reopens tomorrow after today's closure for a public holiday. Now, next up will be the Japan 225 representing the Nikkei 225. So the Nikkei 225 broken down below our tightened short-term pivotal support level. So kind of invalidating our continuation of this bullish trend bias after that very strong impulsive up move from that 7 week of bullish breakout from the range resistance of formerly ascending minor ascending triangle range resistance that was previously in place since 13th of May this year. So this push down has been more or less reinforced by that negative news flow with that Trump's trade on Japan's we call it ongoing trade negotiation that is moving very slow, and Trump is unhappy that he threatened to hit Japan with a new fresh tariff. So that causes a negative feedback loop into the Japanese stock market for Nikkei 225. So right now there could be a minor corrective pullback. So what I could see over here is that now potentially we could be in the midst of a minor corrective wave 4, as that wave 3 may have peaked yesterday at this 40,000 40,840 level. Okay, so this could be the peak of that minor wave 3. So this is the one, minor wave 1. This will be the minor wave 2, corrective wave 2, and now is the yesterday could be the peak of that wave 3, given that it broken below that 23.6% Fibo retracement in today's Asia session. So the next level to watch out for will be the 39.56 and the 39.145 levels. So these are the 50% and the 61.8% Fibo retracement, which is typically a wave corrective wave 4 target. All right, so and graphically this 39.56 also confluence with the former minor swing high area of 13th of February, and 14th of February now turns into a pullback support level. All right, so with that, let me remove this. Okay, so for today I will have a pivotal resistance level for today at today's intraday session high, which is at 40,355 level. 40,355 level. Okay, 40,355 level. So we'll be flipping to a intraday bearish bias for today for this minor corrective wave 4 decline to play out. Support level to watch will be at 39,560. First support, if this first support level can't hold, the next support level will be coming in at 39,145. So once it hit around between these two support zone, I'll be looking out for bullish reversal candlestick to flip back to a bullish bias again, given that the overall picture of the Japan 225 still remains on a bullish picture from a medium term perspective, as price action broke out above the minor ascending trend line and straight above the 20 and the 50-day moving average, and as well above the 200-day moving average as well. Only a sudden bullish reversal and the hourly close above 40,355, so that would invalidate the minor corrective decline scenario and see the bullish tone reviving back into Japan 225 to re-expose the next resistance level at 41,050 next. Right, so that's for the Japan 225. Next up will be the Germany 30. So the Germany 30 managed to did that pullback as expected, and managed to actually, the hourly RSI managed to inch back up above the 50 level mark after bouncing off from this parallel ascending support level. Right, so indicate that that bullish momentum still remains intact from the Germany 30 after that minor pullback. So the pullback hit exactly at our first support zone at 23,980, 23,980, 23,770, 23,770. That means exactly hit the lower limit of this support zone at 23,890. So still no change, still using 23,770 as my short-term pivotal support that confluence with the 20-day moving average. First resistance to watch will be at 24,110. Above it sees 24,260 next, which is the minor conjunction area of 6th of June and 10th of June, and as well as the one-time Fibo extension from the low of 20th of June. Only a bearish breakdown and the hourly close below 23,770 that would invalidate today's intraday trend bullish bias to kickstart a deeper minor corrective decline sequence, retesting 23,510, 23,440, which is confluencing with the upward sloping 50-day moving average as well. Right, so that's for the Germany 30. Onward next will be the major US stock indices, starting with the Wall Street 30. So the Wall Street 30 continues to bounce as expected, almost hit our resistance level at 44,220 before it inched down lower during the start of today's Asia session. So with that, I will be using a Titan short-term pivotal support level for today at 43,850. 43,850 will be my Titan short-term pivotal support level, slightly below yesterday's US session low. maintain the intraday trend bullish bias on the US Wall Street 30. Next resistance level to watch will be at 44,400 / 44,520. 44,750 / 44,820 coming in next, which is a Fibonacci extension cluster level. All right, only a bearish breakdown and the hourly close below the Titan short-term pivotal support at 43,850 that would invalidate today's intraday trend bullish bias to kickstart a minor corrective decline sequence, exposing the next near-term support level at 43,550, followed by 43,290 / 43,160, which is the which is the former minor ascending range resistance, now turns into a pullback support. And if you do the Fibonacci retracement of this ongoing impulsive wave 3, that also constitute close to the 38.2% Fibonacci retracement as well. All right. That's for the US Wall Street 30. Next up will be the SPX 500. So the SPX 500 also appears up as higher as expected. So with that, we will be flipping to, we will be maintaining our intraday trend bullish bias over here. The hourly RSI continues to print out a series of higher low above the 50 level, indicating that bullish momentum still remains intact for the SPX 500. So using a Titan short-term pivotal support level today, 6,175, which is slightly below the intraday low of 6,182 that was printed in the US session yesterday. So 6,165, Titan short-term pivotal support, maintain our intraday trend bullish bias. Two key resistance level to watch, 6,250 in first step, followed by 6,290, which is the one-time Fibonacci extension taken from the low of 3.618 Fibonacci extension taken from the low of 19th of June. Only a bearish breakdown below 6,175 will invalidate today's intraday trend bullish bias to kickstart a minor corrective decline sequence, revisiting 6,136. A breakdown below it exposes 6,110, followed by 6,040, which is pretty much close to the rising 20-day moving average. And if you do the Fibonacci retracement of this ongoing minor impulsive wave 3, the 6110 confluence with the 38.2 Fibonacci retracement, and the 6070 confluence with the 50% Fibonacci retracement. Right, so that's for the SPX 500. Next up will be the Nasdaq 100. So the Nasdaq 100 hit our resistance level at 22,710 before it managed to do a minor pullback as we are speaking right now. So with that, we will tighten our short-term pivotal support level for today at 22,565, maintain our intraday trend bullish bias. Next resistance level to watch will be 22,855 over here. Above 22,855, may see the next resistance to come in at 23,190, which is the Fibonacci extension clustering level. 3.618 from the low of 19th of June and 1.236 from the previous low of 23rd of May. All right, so only a bearish breakdown and an hourly close below 22,565 will invalidate today's intraday trend bullish bias to see a deeper minor corrective pullback unfolding on the Nasdaq 100, exposing the next support level at 22,360, 22,236, maximum 22,065, which is the rising 20-day moving average. And if you do the Fibonacci retracement of this ongoing minor impulsive wave 3, okay, that also constitute with the 38.2% retracement, which is the 22,235, and the 50% Fibonacci retracement confluence with 22,065. All right, so that sum up the intraday technical outlook on the major stock indices. Let us now focus our attention to the commodities asset classes, starting with the gold XAU/USD. So for spot gold XAU/USD, it continues to rise as expected. So right now the hourly RSI is coming to the overbought level, but there's no bearish divergence. So indicating potentially at the start of the European session, there could be a minor pullback. So as long as this minor pullback didn't surpass below our Titan short-term pivotal support level for today, which is 32.93, we will still maintain our intraday trend bullish bias for gold XAU/USD. First resistance level to watch will be 33.46, which confluence with the 20-day moving average. A breakout above 33.46 will increase the odds that we are now at the start of a new impulsive up move sequence. That means stating that the down move from 16th of June all the way down to 30th of June, this is only a minor corrective decline, and above 33,046 increase the odds that gold XAU/USD is now kicking start a fresh impulsive up move sequence to continue its medium-term uptrend phase. Above 33,046 exposes in next step, in first step, the intermediate support level, the intermediate resistance level of 34 figure level, which is 3,400. Only a bearish breakdown below 32.93 will negate today's bullish tone to retest yesterday's or last Friday minor swing low area, which is the pin bar low, pin with the hourly pin candlestick low at 32.50 level. Only a breakdown below 32.50 level will see a deeper minor corrective pullback to expose 32.05, which is the minor swing low area of 20th of May. So that's for gold XAU/USD, still maintaining our intraday bullish bias with a tightened short-term pivotal support level for today at 32.93. Lastly will be the West Texas oil. So the West Texas oil continues to trade lower below our pivotal resistance level at 66.67, where we flipped to a bearish bias on Monday because of that bearish momentum condition that's being flashed out on the hourly RSI. So now the RSI, as we are speaking, continues to break down as well. So there's also a bearish breakdown as we are talking right now, after printing a series of lower high yesterday, right below the 50 level, so indicating that bearish momentum still remains intact on the West Texas oil, at least from a short-term time horizon. So with that, no change, level still remains the same, 67.67 short-term pivotal resistance level. Maintain our intraday trend bearish bias for West Texas oil on the hourly time frame, with the next support level to watch will be 64.05. That is confluencing with the 50-day moving average. A breakdown below it exposes 62.50 next. Only an hourly close above 67.67 may negate today's bearish bias to see a squeeze up to revisit the critical resistance zone of 69.15/70.60, which also confluence with the 200-day moving average. All right, so that's for West Texas oil, and that also sum up the intraday technical outlook on all the broad-based cross asset classes that we have covered on the daily basis. So now let us now focus on the economic calendar. What are the key data to look out for thereafter? So at 1 p.m. Asia time today, or Singapore time, we have Japan Tier 1 data, another Japan Tier 1 data, which is consumer confidence. So market is expecting a slight uptick to 33.6 for the month of June, above 32.8 print that was printed earlier in May. Okay, so that could potentially influence the dollar yen, the yen crosses, and the Japan 225 index. Then thereafter, as we head into the European session, will be rather quiet, except for 3:40 p.m. we have an ECB official Gandos speaking, and followed by some labor data out from Germany, which is the at 3:55 p.m. The unemployment change and the unemployment rate. And thereafter we have the 5 p.m. we have the aggregated Eurozone inflation rate. It's a flash figure, a preliminary reading for the month of June. So for the core inflation that is excluding food and energy, market is expecting a same pace of increase at 2.3% year on year from the May print of the same level at 2.3% year on year as well. And thereafter we have the important second day of this so-called we call it the second day of the European ECB forum on central bank. It's a kind of a forum where major developed central bankers are taking part, and today will be the second day, which is the most important day. Why? Because we have a slew of important central banks leaders, or we call it central bankers, speaking publicly. So I believe that if they are speaking at the same time in a panel discussion. So at 9:30 p.m. Singapore time, we will be hearing from ECB President Lagarde, Bank of Japan Governor Uda, Bank of England Governor Bentley, and the Fed Chair Powell. Right, so something to look out for that could influence the intraday movement on almost all the broad-based cross asset classes. And after that, at 10 p.m., we have the ISM manufacturing PMI data that could potentially influence the major stock indices, the major US stock indices movement. And after that will be a rather quiet US session. All right, so in tomorrow's early Asia session, we have the AU retail sales that will be out at 9:30 a.m. before the start of our daily dose at 11 a.m. So AU retail sales could potentially influence the Aussie dollar, the Aussie cross pair, and the ASX 200. All right, so with that, let's sum up today's daily dose of market insights. I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.